Ronnie, Adriel. China property is in the spotlight with the central bank unleashing $42 billion for a re-lending program to buy unsold homes. Will the stimulus be enough, in your opinion, to put a floor under the spiraling property market?
I think the problem is so big and so complicated that it is not one single action on the part of the bank, of the country, that can really resolve the situation. So I think it's a step in the right direction, but I think there's a lot other complementing element that needs to be there. For example, moving forward, how do local government get money if you cannot no longer sell land like they have done in the last 20, 30 years? So there's a lot of pieces to it, and that's a good, useful piece to it.
Well, you're very China-centric, so as a property developer there, what would you like to see more from the government to ensure the future of this market?
Well, for our business, we really don't need the government, in a sense. We are not residential developers, so that's their problem, not our problem. And the private developers' problem, not our problem. So from our perspective, just leave us alone. In time, we will come back and we'll buy more land. Well, that's his problem, not mine. I'm shedding everything. But that's the reality.
As Ronnie mentioned, we're mostly in the discretionary high-end retail, so that's a very sort of different set of market dynamics. What we're really looking for is confidence. When the consumers have more confidence, especially in the first-tier cities where sales are actually lower than in second-tier cities, the first-tier cities need a confidence boost, and when that happens, then I think the consumers will come back.
Well, speaking of longer term and also something for you to think about, Xi Jinping the Chinese government has talked about affordable housing multiple times and the need to shift to a new property model. Now, what do you think the future of property would look like in China?
It'll be very different from what it was the past, decade or a couple of decades. I think it'll be healthier. It'll be more sustainable, both financially, but hopefully also physically. That's something that we're looking at. Obviously, we're not the big, massive developers doing a lot of residential that I think you're referring to. We're on a much smaller scale. But I think that the market has to change. It's not going to be as sort of a sure win in terms of investments. One of the reasons why property was so important to the Chinese economy, one of the reasons, was because it was one of the few investment tools. Amy just now talked about, her best investment was in alternatives. And in China, I think most people's best investment has been in the alternative of real estate, rather than in the stock market, which was relatively underdeveloped and not really reliable. And so everybody had put their money into real estate. And I don't think that will be quite as certain for retail investors as it was in the past.
Yeah, definitely at a shifting point in time. And for your company specifically, we mentioned that you're Hong Kong, China specific. Currently, your price to book multiples and share prices are under pressure. What's your take on that?
Well, first of all, I don't think there's any pressure. Everybody's in hell. Everybody's selling at 0.27 or whatever, which is ridiculous, obviously. So if everybody's selling at that level, we're selling at that level, well, I understand why we're selling at that level. I'll let Adriel explain it if he wants to. But for other people, it's different reasons. You shouldn't really be talking to me because I have a pretty bad track record. Just tell you guys a story. 15 years ago, 21 real estate developers from mainland China belonging to a real estate association came to see me in Hong Kong. And I told them, I said, if your association had 100 members, in 15, 20 years, 20 of you will make a lot of money, and 5% of the total will make tons of money. And then 50% of you will be gone, will be bankrupt. The rest of you will be okay, but it won't be particularly good, particularly bad. I was totally wrong. I said 15% will go bankrupt, 95% went bankrupt. So my track record is terrible, So I better shut up and let the younger generation talk.
I think more broadly speaking, in this part of the world, all the real estate developers are underperforming. All of our price to books are very low, and there's many reasons for that. Obviously, there's a huge China discount. There's a huge real estate sector discount. And then, of course, as we all know, a lot of capital has not been flowing into Hong Kong or mainland Chinese stocks. It has been flowing out. And for that reason, that I think is the main reason why our valuations are so low and so sort of despicable today.
And what does that mean for your strategy? Have you thought about shifting geographic focus or strategy?
Well, I mean, for us, it means that we're probably not going to be tapping the stock market anytime soon at this valuation, first of all. But it definitely does force you to look at the market a little bit differently. Interest rates, I think, have a bigger impact than our valuation on our decision making. And when you're in a high interest rate environment, which we are relatively speaking today, that definitely is going to cause you to slow down or reconsider some of your big investments.
And for your malls in China, with the consumption rate down, what are you doing to boost sales there?
Well, first of all, consumption is down on last year. Last year was a record year. We're roughly back to 2022 levels. 2022 was a record year. During COVID, many of you will remember, actually mainland China luxury retail sales almost tripled. So we're at a very high base right now. So yes, we've come down half a notch, but we're still doing very, very well, much better than pre-COVID, something like more than double pre-COVID. So first of all, the baseline is that we're actually not doing so badly. And I think that, we just have to make sure that we're investing appropriately. We've done a lot in terms of getting closer to the consumer, and I think that each industry will have a slightly different approach, but our approach has been to really try to own the customer in a way that that landlords haven't done previously.
I wanted to touch upon something that you mentioned earlier, the flow of money into Hong Kong and the pressure that the city is facing as a whole. With Hong Kong standing on the front lines between China-US tensions, there's this rhetoric growing from the US side that Hong Kong equates China. And how should we view these risks of the global community no longer seeing Hong Kong as international, and how to address them?
Well, the risk is real. America is stopping a lot of money from flowing to mainland China, and because Hong Kong is now part of China, so they don't want them to flow to Hong Kong as well. So it's all politics. So let's make sure in our own head that we get it clear that something is real economics, something is political. And political things, the wind changes. But it may not change quickly, but sooner or later it will change. So let's not look at a political event and think that it is an economic event only. Of course, it affects the economy, and it affects our business and many others' business. But it's really a political dimension to it that is, beyond our control. I think over time, the whole world will have to readjust, the whole world will have to rebalance. In what shape and form, we're not 100% sure. I have some thoughts, some ideas on it, but it's not going to be the same as before. And so let's make sure, my message to everyone is, let's make sure that our heads are clear. What is political and what is purely economical. And so, when it comes to political market, wow, it's a wild place. So.
And tying this issue back to Hong Kong property, the residential prices are at levels even below before the government scrapped all the buying curbs. What do you think is the reason behind this?
Well, first of all, I think a lot of people don't analyze the fundamental economic reason why Hong Kong's real estate market is being challenged. To me, it's a rather simple one. I've been observing this market, and I've been playing in this market for the last 40-some years. First of all, under the British high land price policy, they still deny it, but it's crazy to deny it. That way, the British companies can repatriate a lot more because less tax here, and because of the high land price policy, you don't have to have high tax here. So they can repatriate more. For Hong Kong people, it's not a bad thing either. Wealth effect make people feel good when the real estate prices go up, and the government can have low salary tax as well as corporate tax. So there are many good points. So the British is the first one that really kept real estate prices up. The second one is Beijing. In the negotiation of 1997, Beijing was afraid that the British will sell a lot of land at high prices and take the money out. And so they make sure that there's only 50 hectares per year of supply. So with limited supply of land, prices continue to go up, number two. Number three, the Hong Kong people. 60% roughly of Hong Kong people own their own homes. We don't want to see prices fall. And real estate has become such a big thing in the economy. You use it to mortgage and start a business somewhere, for example. And then finally, the yellow ribbon people, the anti-government people, the so-called pro-democrat people. They're not Democrat. Don't be fooled by them again. Anyway, so those guys, anything that Hong Kong government want to do, anything that Beijing want to do, they say no. So the Hong Kong government want to sell land, and they say no. So, they probably hate developers, those guys, but they ended up helping the developers because they keep prices up. And so when you think about it, for 50 years, starting roughly in the 70s, that these four groups of people have limited the land supply of Hong Kong. And as a result, there's no place to go for real estate prices to up. However, with the 2019 riot on the street, which is so violent, it's unbelievable. When it's so violent and the police is so restrained, I just want to clear it again in history, that those guys are now, because of the national security law and before Article 23, so the opposition, which is purely for political reasons again, not economic reasons, they damage Hong Kong economically for their own political gain. So as a result, once that is removed, for the first time in 50 years, that the Hong Kong government can finally supply land in a more reasonable, more economically sensible way. That means more sufficient. And so when that happens, after 50 years of high land price policy, how can real estate prices not come down? So what's the big deal? Now, of course, I know if you own an apartment, that's a big deal. Or if you want to buy an apartment, well, and you're happy. It's a big deal too. You're happy. But overall, when you look at the economy and look at the Hong Kong real estate sector, we are seeing the biggest structural change in 50 years. And so for prices to go down is to be expected, right? Isn't it? It's so clear.
What does that mean for the developers and the big families here?
Again, that's not my problem. You invited the wrong guy to come and speak. In Hong Kong, we have basically rental properties, and we're suffering. Office prices down, retail prices, okay lah. So we don't sell that many residential. I think that some very honest developers have said already that we're not going to buy land anymore. Well, if prices come back, I think they will. But fundamentally, because the market has changed, so the behavior of the developers will also change according to the environment outside. And so what will happen to them, I don't know. We'll see. We will see. You have some developers that are cash rich. Are they buying? I think some of those guys will buy, but there are also others who are quite strapped for cash. So I think the market is really evolving. I don't want to jump to a conclusion when I don't have enough visibility.
Maybe I'll just add one very quick thing. We're mostly in the rental properties, and we do see rents coming down, especially in offices, but a little bit in retail too, especially since COVID. So retail rents are way down. Frankly, I think that's good for Hong Kong. We need that space. I think business owners, business founders need that space to experiment, to offer better experiences to tourists who come to Hong Kong, to locals who choose to stay in Hong Kong to consume, rather than go up to Shenzhen or elsewhere, or Japan. And I think that when they have that extra cushion, we will start seeing some more interesting everything from F&B to services to retail. And I think that's something that our city desperately needs.
The issue that, Ronnie, you bring up about developers no longer buying land, would that have an impact on the low tax regime in the city?
Well, the low tax is enshrined in the basic law, so it is not something that anybody can meddle around with it. We just have to find other ways to make ends meet. But as Adriel said, it is inevitable that a lot of prices will have to adjust after 50 years of a very man-made, artificial high real estate price. Of course, China opened up, so Hong Kong economically benefit, so we can sustain the high price for the time being. Now, as you mentioned, mainland China is also having economic challenges like the rest of the world, Hong Kong also. And so the whole structure of the real estate is changing so fast. Not to mention, as Adriel talked about it, that now going to Shenzhen to buy things, right, to consume on the weekends. I said, what's a big deal? Such as grow up, such as economic reality. In the old days, they used to come to Hong Kong to buy because, the quality is better. So now their quality has gone up and price is still, differential is big. So Hong Kong people go back there to spend. I think it's a wonderful thing. Now, it hurts me because the retail prices, retail rent has no place to go but to come down. And the whole asset value has to adjust in Hong Kong. That's just a fact. If you don't accept it, if you don't recognize it, then I would say, you will be a very sad person, very unhappy person. But if you rationally understand it and accept it and say, okay, what do we do? What do we do in order to get the best out of the present situation? And so with Shenzhen opening up, I see very good things. For example, Hong Kong people's Putonghua will be a lot better. And I have been singing this song for the last 20-some years, and that is, politically, one country, two system. But economically, you got to integrate with where the money is. 50 years ago, 60 years ago, America was hot. So we all gravitate toward America. We all learn to speak English and deal with America. Then Europe rose, and then Japan rose. And we had to deal with every one of these. In the last 30 years, who has been China has been accounting for some 32% of the world's economic growth for a long time. And so if that's where the money is, what's wrong with looking to the right direction? The dumb people, the yellow ribbon people, they hit people from mainland China carrying a bag. Those guys are here to spend money, and then you chase them away, right? So the same guys who hit those yellow ribbons who hit the mainland shoppers in Hong Kong today themselves, damn it, are going back to Shenzhen to consume, right? Let's hope that nobody will hit them. So such is the change in this part of the world that is just amazing. And I think we need a cool head. Don't use the old paradigm, the old economic paradigm to understand Hong Kong. In a sense, it's an anomaly, as I said. 4 parties make Hong Kong real estate prices stay high for 50 years. When that is fundamentally changed, everything changes. So let's get our hair adjusted to a new environment, accept it, and do the best out of it. I still think there's tons of opportunity to make money in Hong Kong. The private bankers, all 3 speakers before us, they were all talking about money flowing down. It's true, it's real, right? So Hong Kong still has a lot of opportunity. So let's look forward instead of backward.
This adjustment period of where we see right now the new homes are actually selling cheaper than existing homes, and also the adjusting to the new reality that you mentioned. How long do you think this period will last?
It will last as long as it will last. But Hong Kong tend to adjust pretty fast. But this time the difference is people don't feel, you have to take care of the consumer's psychology, right? They don't feel too assured of the future, and when the home go down in prices by, I don't know, 20-30%, it's going to affect your consumption pattern. So a lot of things are happening. Frankly, a lot of banks are holding the bag for a lot of speculative real estate of the last couple of years. So the banks will have to adjust, the individuals have to adjust. I'm all for looking forward to see what the brave new world of Hong Kong is going to be like, and we will still be here. We have, 40% of our rental income every year, roughly $40 billion is still coming from Hong Kong. So, we will ride this one out.
And I'd like to ask about succession. From Ronnie to Adriel, how has the transition been?
Ask the shareholders. The share price hasn't been doing particularly well, so I think that their vote is pretty clear. No, I mean, I think
ask Amy.
Yeah, ask Amy. She'll have a better idea. No, I think it's been pretty smooth as far as I would say. I've been involved in the business for 14 years, and it's not like I'm not unfamiliar with how things work. It's just a change in psyche, both for management and also I think for our outside stakeholders. And that'll take some time to adjust. It's very normal. But more or less our business is business as usual.
When you think about the future of your company and the legacy, what is the vision that you have for where you're taking
the world is a very different place from where it was just 15 years ago when I joined the company. So you have to be reactive and you have to be faster on your feet today, I think. These grand strategies that we've implemented over the past couple of decades have paid great dividends. But I think that the way we look at the market going forward has to be different because the market's different.
Can you be more specific in terms of how?
So we used to do a lot of big greenfield investments. Those took decades, literally decades, to repay. And I think that the size of the projects may have to get a little bit smaller. There's many ways that could happen. And then also the markets maybe are less so greenfield. Maybe it's going deeper vertical rather than horizontal. So these are things that we've been talking about and looking at internally. I think they're sensible direction options, but at this point they're just options.
I just add one thing to what Adriel said. When everybody's in hell, there must be opportunities. Isn't that, 10 days ago I hosted Jamie Dimon in Hong Kong with a couple hundred people. And that's what John Pierpont Morgan said, when there's blood on the street, hey, that's the time to buy. And you go to the mainland of China today, the government doesn't, local government don't have money, the people don't have money, nobody have money. Hey, that's great, I got a few bucks, right? And so there must be opportunities, but as Adriel mentioned, don't look at our past and say that's the immediate future. The opportunities are not there. Well, it's there, but we may not want to take it. These big greenfield projects, but there are a lot of smaller opportunities, vertical as he calls it, that are just, the return is very, very lucrative. And so, we are finding such opportunities, but the market is still giving us 0.7, 0.8 price to book. You guys will wake up one day, but let me buy first.
We have been buying.
We have about 30 seconds left for both of you. What is the best investment that you've made?
Sorry?
What is the best investment you've ever made?
Oh, raise a nice son.
What can I say that'll beat that? No, I think you have to invest in yourself. I mean, each of us has to invest in yourself. Make sure that you get better every day, and make sure that you become a more valuable asset to the organizations and the stakeholders around you.
Ronnie, Adriel, thank you very much. Let's give them a round of applause.
Thanks.